Thank you for joining us at XM.com for this Forex Preview video. It looks like it's going to be a busy week for the United Kingdom. We'll be taking a closer look at that. I'm Cristina Marujos. With me today is investment analyst Cristina Parthenidu. Cristina, on the data front, we're expecting CPI inflation and retail sales numbers for February and then flash PMIs for March on Thursday. How important will the data be, especially when the Bank of England is concerned in how it will progress with its rate hike path?
Hi, Christina. Indeed, it will be a packed week for the UK and the pound, of course, in terms of data releases. But the real question here is how will those affect the Bank of England's monetary tightening procedures, which you already mentioned? Well, the bank has already raised its interest rates 3 times since the start of the year. And last week's policy meeting showed that policymakers are not very confident to use more aggressive tightening actions, for example, raising interest rates by 50 basis points instead by a normal increase of 25 basis points, explaining that the Ukrainian geopolitical crisis will not only boost inflation, but also create adverse impact on households' income and worsen the cost of living crisis. So winding down stimulus at an emergency time for the globe and at a time when sanctions against the Russian oligarchs could weigh on the UK's financial system is not something the central bank is confident to do at the moment, of course, but perhaps we can't rule out that option either, and the coming data releases will direct the central bank accordingly. Consumer and producer price indices for the month of February are expected to drift higher on Wednesday, and potentially the March readings next month could appear even stronger because of the global sanction game against Russia and the geopolitical crisis in Ukraine. While the UK is less exposed to the Russian energy market, but still global supply restrictions and the price increases in other sectors like the food industry could still boost inflation in the UK and squeeze household income. Now, in other data releases, flash PMIs for March are expected to weaken, but are expected to hold well in the expansion area. Retail sales for February, monthly retail sales could also slow down, but overall keep the outlook positive for the UK economy on Thursday for now. Now, if those readings appear much lower than expected, that could create some speculation that monetary tightening may not move as fast as we previously expected, though the central bank will need more data evidence in the coming months to support such a narrative.
Apart from the data, though, we also have another event coming up. The Chancellor of the Exchequer, Rishi Sunak, will present his spring statement before the Parliament on Wednesday. And the big question is what the government will do to ease the cost of living crisis during an emergency time. Should we expect big changes?
Yes, the spring statement will be in focus on Wednesday. The government has provided some relief already. In February, the Chancellor announced a package of support measures in response to rising cost of living, including a £150 council tax rebate for some homes, as well as a £200 credit on energy bills to be repaid over the next 5 years. Of course, the Ukrainian crisis will further weaken households' purchasing power, and more financial support will be provided this week, potentially including more measures as regards energy prices, which are the major drivers of inflation. For example, the Chancellor could scrap VAT on domestic energy bills, provide more giveaways to help with household energy bills and petrol tank refills. Though the sanctions against Russian oligarchs is not coming without costs, and some areas like whether the government will avoid or delay the rise in national insurance, which comes into effect next month and is a key contributor in supporting the health system, that is still in debate. Also, whether it will drive the overall VAT rate to its full 20% level at the end of March after it was reduced to 5%, and then it rose to 12.5% last October to help restaurants, pubs and bars. Whether that will decline is another question. So overall, I think the government is not expected to make big changes after each huge spending during the pandemic. It may remain patient until the Ukrainian situation becomes more clear. And if someone is also interested about the UK's defense spending, the government has already increased its spending on that before Ukraine's invasion, and it's not expected to add more wave on that this time either. So overall, I don't think that the spring statement will bring big changes this time.
And finally, let's have a look at the pound. How do you think the currency will move with all these events on the calendar this week?
Well, the spring statement will come with some fresh economic projections from the government, and those will be based on some updated data from March. So expect some caution on growth projections and higher inflation readings, but this is something markets have already priced in. And stronger inflation data on Wednesday could also prove to be less market moving factors because of that. Perhaps if flash PMI readings surprise to the upside, raising concerns about the economy, that could add some support under the pound. But technically, for the next bullish wave to take place in pound dollar, I think the pair will need to clear first the 1.32 level before it touches the 1.33 and 1.34 levels.
Christina, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.